Mastering the Long Game: Comprehensive Investment Strategies for Wealth Building. Are you tired of watching your hard-earned savings sit stagnant, barely keeping pace with inflation? Do you feel overwhelmed by the complexity of the stock market, unsure how to move from basic budgeting to genuine long-term wealth creation? The reality is, the difference between simply having money and having your money work for you is strategy. This comprehensive guide is your personal financial GPS, designed to cut through the noise and provide clear, actionable investment strategies, from the essential foundations every beginner needs to the advanced portfolio optimization techniques used by seasoned professionals. Prepare to transform your financial future by mastering the disciplined art of investment strategies and wealth building. Building long-term wealth is not a matter of luck or timing the market. It is the deliberate application of consistent, disciplined investment strategies. It is the crucial step of moving from simply saving money to putting your capital to work, allowing it to grow exponentially over time. This guide offers a robust framework for investors at every stage, detailing the foundational principles that lead to financial independence and the advanced strategies required for portfolio optimization. 1. Foundations for Beginners: Planting the Seeds of Wealth. Investment strategies are the rules and philosophies you follow to allocate your money into assets, such as stocks, bonds, or real estate, with the expectation of generating a positive return over time. These strategies are the blueprint for your financial future, dictating how you manage risk and pursue growth.
The compounding snowball analogy. Think of your initial investments as a small snowball you roll down a long hill. In the beginning, it seems to grow very slowly, barely picking up new snow. This is like the first few years of investing. However, because it's constantly picking up more snow, returns on your returns, the snowball gains size and momentum. Over a long enough time, decades, the snowball's growth accelerates dramatically. It becomes an unstoppable force. This accelerating growth is the power of compounding, the central principle of long-term wealth building. Immediate, low barrier to entry action. Step open a retirement account and automate your first contribution. If you have access to an employer-sponsored 401k or 403b, open it today, especially if there is an employer match, free money. If not, open a Roth IRA or traditional IRA at any major brokerage. Set up an automatic transfer of just $50 to $100 per month and invest it in a low-cost, broadly diversified total stock market index fund, or ETF. This single action establishes the discipline and the mechanism for compounding. 2. Advanced analysis, optimization, and strategic deployment. For the professional or serious investor, the goal shifts from simply accumulating assets to optimizing the portfolio for risk-adjusted returns, tax efficiency, and capital preservation. This involves a deeper understanding of valuation, strategic asset allocation, and how macro-level forces affect specific investment theses. Financial ratio. Deep dive. Return on equity, ROE. A crucial metric in advanced fundamental analysis is return on equity, ROE. This ratio is a measure of a company's profitability in relation to the money that shareholders have invested. It tells you, for every dollar of shareholder equity, how much profit the company is generating.
Interpretation. A high ROE generally indicates that a company's management is using the shareholders' capital efficiently to generate earnings. Conversely, a low or negative ROE suggests inefficiency or financial distress. Strategic application. For long-term wealth building, investors seek companies that can maintain a high and consistent ROE without taking on excessive debt. It helps filter out companies that are profitable only due to high financial leverage. An advanced investor would use the DuPont analysis, a framework that breaks ROE down into its component parts, net profit margin, asset turnover, and financial leverage, to understand the source of the return and ensure it's driven by operational excellence, not just dangerous debt. Market trends influencing investment strategies. Two major intertwined market trends are dramatically shaping how advanced wealth is built: the rise of generative artificial intelligence, Gen AI, and automation. Influence. This trend is driving unprecedented sector concentration in the broader market, as investor capital floods into the few companies perceived to be foundational to the AI revolution, e.g., chip makers, cloud infrastructure providers. It's also rapidly increasing the productivity moat of companies that successfully adopt AI, leading to superior profit margins and ROE. Strategic decision-making. Professionals must decide whether to embrace this concentration, known as a barbell or risk-on approach, or whether to strategically diversify away from highly valued tech to capture value in overlooked sectors that are merely users of AI rather than creators. This forces a constant reevaluation of valuation models that often struggle to price the exponential, non-linear growth promise of AI.
The new interest rate regime and the end of free money. Challenge. Following a decade of near-zero interest rates, central banks have hiked rates to combat inflation. This new regime fundamentally revalues all assets. Growth stocks, which rely on future earnings, see their valuation depressed because those future profits are discounted at a much higher rate. Conversely, fixed income assets, bonds and high-yield savings, now offer a genuine, risk-free return for the first time in over a decade. Optimization implications. This shift forces investors to pivot from a TINA, there is no alternative mentality, where everyone was forced into stocks, to a more nuanced, balanced approach. Strategic fixed income allocation is back, allowing for true portfolio diversification. High net worth clients are actively using short-term treasury bills as a low-volatility, tax-advantaged anchor to their portfolio, providing a reliable source of liquidity and an essential counterweight to their riskier equity holdings. This complexity necessitates more dynamic and granular asset allocation models. Actionable dual checklist. This checklist provides tailored, specific actions designed to propel both the beginner and the experienced investor toward their wealth-building goals. Beginner needs: focus, discipline, education, and foundation. 1. Start tracking your net worth monthly, assets minus liabilities, using a simple spreadsheet or app. 2. Increase your automated investment contribution by 1% of your salary today, the increase the rate strategy. 3. Consolidate all high-interest consumer debt, for example credit cards, before purchasing any new investments. 4. Read one introductory book on investing, for example The Simple Path to Wealth, to solidify your knowledge base. 5. Set a calendar reminder to rebalance your portfolio, bringing asset allocation back to target once per year. 6. Ensure you have at least 3 to 6 months of living expenses saved in an easily accessible, high-yield savings account. The Wealth Builder's Commitment. True wealth building is an ongoing strategic process, not a singular event. It demands discipline in automation, courage in asset allocation, and knowledge in tax efficiency. Whether you are planting your first seed with an index fund or optimizing a multi-asset portfolio using advanced metrics like ROE, the core commitment remains: embrace compounding, mitigate behavioral biases, and adapt to the evolving market structure shaped by trends like Gen AI. Commit today to the informed action that transforms saving into lasting financial independence. Your future self will thank you for the deliberate strategy applied now.